There we have it, some of the key movements out of yesterday's trading session. What are your expectations for the trading day ahead?
Hi, Alicia. Yesterday's trading saw some form of return to favor of the banking sector. And we think that what's going to happen today is probably a continuation of that recovery from the banking sector. If you recall what I've always said, at some point, the bad news is going to be priced in. People are going to start to look at the long term. And I think that's beginning to happen. Some of those banks had actually breached previously set support levels. And so we're not exactly shocked that we've seen a rebound in the market. I think from an index point of view as well, we seem to have set a natural support level around the 21,000, 21,400 level. So I think we've seen a number of rebounds around that level. And I believe that that would continue going forward. You know, my position on the Nigerian market has always been that at times the bad news is overtly priced in into the market, and people don't actually focus on the fact that there is actually a recovery on the horizon.
Well, sustainability of these recoveries are, the key points to look at. I mean, as you mentioned, we have seen bouts of rebounds having occurred in the past. I think it was just roughly 3 weeks ago, around about the 23rd, 24th of August, where we saw the market on a steady upturn as well, and then came crashing down yet again. So when it comes to sustainability here, do we have to wait for the final audit results out of the CBN to come to the fore before any sustainable run can be priced in?
Hi, Alicia, the real issue here is I don't think that the end of the audit report is going to change anything dramatically. The underlying fact is that there is a weakness in the underlying economy. And that weakness is being priced into stock prices. The real sector of the economy has suffered significantly as a result of the lack of credit coming out of the banks. So my take is that we'll continue to see what the technical people would describe as heads and shoulders for a very long time. The market will have dead cat bounces until we see the Nigerian economy and the key sectors that drive the economy start to recover on a sustainable level. I don't think we're going to see the sort of levels that we saw in about May, June this year. The reality is that there's still quite a lot of news that hasn't been priced in. The insurance sector, if you look at the insurance sector is in a lot of trouble. The numbers coming out of that sector are so appalling, it's unbelievable. You've got companies declaring huge losses. Premium income is down 50%, 60% in some instances. And I think that gives you an immediate pause of where economic activity is driving towards. And until we can actually recover from a credit point of view, getting the banks lending again, I think the market is going to continue to trade without a very clear direction.
Seeing that you've mentioned the insurance space, let's hone in on some of the players within that sector. We saw IEI, a standout example for the 3 months to June, seeing profit after tax falling back 35%, gross premium down 58%. What's your view on that counter specifically at the moment?
Well, I think IEI, I do have to be careful from a professional point of view what I say about IEI. But however, I think IEI is a company that is looking forward. They've realized that the insurance sector was going to be under a lot of pressure, and you've seen quite a bit of diversification in the business. They've started to do the asset management, diversified into the pension fund market, and I think that in the long term, companies like IEI will continue to drive, will continue to grow. And they'll provide leadership in sectors where they operate in. The key thing for IEI is to continue to reinforce the positives that came out of the 2008 financial year, which is the insurance business, the asset management business, focus on the oil and gas sector, which obviously we're beginning to see some form of recovery in with the lull in militant activities. So we believe that IEI could be a recovery story come 2010. They've actually also gone to the shareholders to raise significant capital, which we believe that if properly deployed, would present IAI as a good opportunity for financial sector in Nigeria.
Well, of course, diversification and focusing on core operations has become a theme when it comes to insurance plays, and not just in Nigeria. With that being the theme, I mean, we saw Standard Alliance seeming to have weathered the storm quite nicely. What is Standard Alliance doing differently if we have to do some kind of comparative analysis between the two?
I think from a size point of view, first, Standard Alliance is a business that has grown significantly. I think there's also a lot of public sector business that comes for Standard Alliance, and that drives significantly the numbers. There's also the life business, which perhaps distinguishes IAI from Standard Alliance. The life business is one where, you know, the margins are significantly higher because the events of payouts are much different from when you're doing non-life risk. So I think that that diversification as well is also the story for Standard Alliance. So Standard Alliance isn't just focusing on the non-life business. They're quite aggressive on the life business. The distribution network is quite expansive, and that ensures that they cover a significantly larger portion of the economy. The bottom line for me for that sector really is scale becomes extremely important. Your ability to deploy multiple service points would also put you way ahead of the market. And then your ability to actually manage your debtors. A lot of these guys have been booking premiums that haven't really been earned because the insured haven't been paying their premiums. So those things will be key in identifying the insurance companies that would lead the market come 2010.
So you've got to consider scale on the one hand, and then you've got pressure on the balance sheet to consider as well. I mean, while we are seeing the strong volume growth in Standard Alliance and price increases filtering through to their balance sheet, it's distribution costs and loan obligations that seem to be standing out here. Capacity expansion program alleviates some of the pressure of those distribution costs. But what about loan obligations? Does that present a concern for you when it comes to this company?
Well, it does, and I think that's something that the insurance sector has got to focus on now. You know, there are quite a number of the insurance players who ventured into the capital markets. Now, whether that isn't the wrong thing, but the reality is that if it was the life players who ventured into the capital markets, then you can actually have some form of justification for that. But you had people who were playing in non-life, very short-term high-risk businesses who were focusing their attention on the capital markets. And in driving the capital market businesses, a lot of those companies actually borrowed to do that. Now, the reality is that there's a significant mismatch in terms of the value of the assets and the loans they're carrying in their books. My belief is that a lot of the insurance companies actually require equity injection. Some of them have been mooting the idea of raising bonds and some fixed income instruments, but I don't believe that their balance sheets are strong enough to actually be able to support the interest obligations that come from those long-term loans. The focus for most insurance companies today should be massive recapitalization, focus on reducing your distribution costs, focus on reducing your bad debts as a result of delinquent interest, as a result of delinquent premiums. And then you can focus on growing your business. If you're not able to do that, then you're definitely going to struggle in the sector going forward.